Hello folks, I'm L.A. Little and this is your weekly NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened last week, what does it tell us about the coming ones. I do this show every Sunday night, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little, so you can catch me there. Subscribe to it, makes it easy for you to be notified whenever a show is posted. You can view it anytime, any place, anywhere, any device, and make it easy. As far as easy, it's not easy to do anything but try to stay with this market, because this market just keeps finding a way to rise. Last week, pretty much flat across the board. If you look here at the change board, not much change. The only one, NASDAQ. Tech stocks taking a big leap forward. SOX was a big part of that. We had the IBB go back up to new highs. We had Apple pushing 120. We had pretty much everything working on the tech sector, but elsewhere, quite a different story and quite a different result. Flat pretty much elsewhere. Good gains on the year so far. Speaking of elsewhere, let's take a look at these markets and let's try to make sense of what's going on. Weekly, S&P 500, you've got a two-bar reversal. First time we've seen this now, certainly on this leg higher. You've seen it before in other places, but over time, usually you want some sort of an extension. You want to go up, you want to go over, you want to do it with less volume. That's a two-bar reversal. That says that we should trade sideways to down on the coming week. Now, all of the two-bar reversals to date have failed to produce anything, and those were all on the daily charts. This is a two-bar on the weekly. If we're going to get some sort of a turn, here's a good sign that may happen. If you look at it on a daily chart, a little bit different, but same sort of idea. You go up 4 days, you go sideways basically like we did back here, but you actually close on the lows. And why did we close on the lows? Because of oil. Oil takes a huge spill. So let's flip over and look at the USO. This is the weekly chart. You can see a huge spike down, 12.1% on the week to the downside. That is a tremendously large move. If we look at it on the monthly, we're going to end up about 16.5% down on the monthly. And as you can see, multiple swing point lows being broken. That usually leads to 2 to 3 bars farther, fast move down on the biggest time frame, which in this case is the monthly. Going back to the weekly, you've already broken all the swing point lows that were up here. Certainly there's some more that have been broken along the way. They've fallen off the left side of the chart. And if you look at the daily, big gap down. Volume was pressing on Tuesday. Wednesday, it actually broke on Tuesday. Wednesday was hanging there. The OPEC meeting, that was Wednesday. Thursday was actually the OPEC meeting, and Friday morning, of course, this gap down off that meeting. Now, just like we've talked about, fast moves in currencies cause disruptions. Fast moves in anything that has a widespread, significant, impact. And what I mean by that is, oil is pretty much in everything. Whether you're looking at transportation, you're looking at manufacturing, you're looking at whatever. I mean, oil pretty much is everywhere. It has its good and its bad. Its good, for example, is that, retail should be better. Consumer durables, consumer staples, consumer discretionary should do better with cheaper oil. But fast moves in something like oil that's such a staple and is so, the effects are so widespread, just like currencies, in a short term can lead to a lot of disruption. And I think that is, to some extent, what we're seeing as a result of what happened and how that is showing up, back in that S&P chart we were just looking at on the weekly time frame. So if we pull it back, look at it the weekly, you get the two-bar reversal. The oil sector XLE, which is a part of this index, certainly took a hit. So S&P's struggling. Dow Jones, not as bad, but still struggling as well. If we look at it, it didn't quite make the high, so you've actually got an inside bar on the weekly there, and that's true of the daily. It's been going sideways. Skip over to the NASDAQ. Powers higher, just powers up, no stops, so you have mixed signals where we're seeing the S&P say, hey, 2-bar reversal sideways to down. NASDAQ, no such case. Now, even on the NASDAQ, again, if we get back to the fast move thought, even on the NASDAQ, you got the situation here where it couldn't go higher on Friday despite the fact that it was trying to, right? I mean, it jumped up and then sold off. And again, that's a result of fast moves in the basic commodity. NDX, same story. Even stronger if you look at it on a daily time frame. You can see it spiked and stayed up there. And then if we look at the Russell, you know, the Russell has tried for 3 weeks to get over the swing point high. Each time it failed. It failed again on this past week, closes at the lows just like it did here. That close at the lows the last time it did this actually led to some downside action. That was this little downside move that we saw back here a couple weeks back. Well, we've got the same sort of scenario setting up again. You know, is this thing going to come back again and try once more? Now remember, the Russell had gotten over this swing point high and it came back. Actually, there was another one up here, a prior one that's already fell off the board now, and it was about like that. And we got up underneath it, stayed underneath it, these 2 bars, and that led to the next big bar down. That's where it gained or got some traction off of this secondary swing point high below it, pushed back up, sets new highs. What's it going to do now? Well, same scenario. It's going to do a retest regen off this high now. And what does that do? Well, right now it's doing a full retest and an immediate one. Okay, immediate full retest typically go back to the backside, the downside, you know, lows, and that's exactly where this one is. Now, it did not hold price on Friday. If we look at that low, 1173.23 is where we closed. 1173.97 was the low. So you can see we actually closed just below the swing point high. So another bar down if it happens tomorrow. Usually I like to see one confirmation bar. If that happens tomorrow, that suggests we're going to get some more selling in the Russell. We've already got that 2 bar on the S&P. So again, enough here to tell us that there's mixed signals that in fact we may finally get a retrace. And I know that's hard to believe, but it is possible. So mixed signals on the indexes. If we pop over and look at the sectors, you got the same sort of situation starting to happen here on the sectors. Now, if you go back and think about the oil, and oil itself is going to hit certain sectors. Of course, XLE is going to get hit, and that definitely got hit. And we're looking at the weekly now. OIH is going to get hit, and that also got hit. And you can see how that one blew it out of the water. So you got another down leg here on the OIH. If you think about it, there's other sectors going to get hit like XLB. Takeaway bar on the XLB, no volume, but it's doing a full takeaway. That looks like that one's going to try to trade lower as well. But there's also others that are going to get hit. XLI does a 2 bar reversal. That one could get some sort of pressure back down into swing point high, do its retest regen. So you got a 2 bar reversal here. You got the weakness in the other 2 sectors, and you're going to get weakness in all the commodity sectors as a result of this. For example, the steel stocks are probably going to get hit. Just go down the board, the gold stocks. I can pull up GLD. You can see that if you look at GDX, the gold stocks themselves, same sort of situation. So commodities in general are going to get hit off this move in gold. In oil. JJC, copper, underneath the lows, breaks down. You can see what I'm talking about. So commodities in general get hit. On the flip side, as I was talking about off the top, XLY gets an extension off of it because, you know, as gas goes down, it certainly makes it cheaper and easier for folks to buy more stuff, right? So XLY, XLP, even though here it's probably more of a dividend pay, and same thing on the utilities, more of a dividend play there as well. XLK we already talked about, making new highs. The IBB, which is the biotechs, also making new highs. What was the other one? The SOX. The SOX also made new highs. So you can see tech, consumer products, they didn't take a break. Those sectors tied directly to oil took a break, and we got a little bit of a pullback on some of the others. Now, one that was really interesting to me was the IYT. You would expect this one would get a big bump. And if you look at it on the weekly, it actually held at new highs. But if you look at the daily, that one actually gave it all up on the daily and set a big volume spike too. So looks to me like transports, you know, when you're looking at these sectors and you're saying, okay, here's an example of a sector that should have just gone up and up and up, more so, yet it sold off despite much cheaper oil. And that tells me the transports probably are pretty stretched from a price, a fundamental price standpoint. Popping over to the ox markets. Here we actually see some weakness still in the emerging markets. And so here's the emerging markets. Yeah, they're trying to climb up, but yeah, they're struggling as well. If you go down the list of the currencies, and believe me, currencies are going to be the story this week again. You got the ECB meeting, going to decide on Thursday, but you got like 5 central banks doing their thing this week: Australia, India, Canada, Great Britain, and the European Union. So it's going to be central banker feast this week. Currencies are going to feel that, and currencies are feeling it as a result of the oil sell-off, because that's also helping to push the dollar higher. Dollar back up there testing the highs. If they break from here, folks, this is a huge ABCD structure up, and if it moves fast like it did last time, it's going to cause disruption again, just like it did last time probably. So if that starts to take off, that also is going to be a mixed signal with some sort of a downside pressure. If you look at the bonds also starting to push again. They're back into this big bar down. They got over it on, I think it was Wednesday, they got into it here, and Friday they actually shot up into it a pretty good piece here. If the bonds keep rising, if the dollar starts moving even higher, that's also, to me, going to signal some sort of a headwind finally for these markets. Speaking about gasoline, gasoline coming down like crazy as well, putting more money into the consumer's pocket. So when you look at it here on this time frame, the weekly time frame, and you look at the FXE, you look at the continued pressure on the FXY, which is Japan. If you look at almost any of these currencies, they're all getting hit, and they're all making new lows or about to. Popping over to the world markets, how are they faring? Well, actually better than you would expect, and that's because of the largesse of the banks, the central bankers. If I look at resource countries, they're getting hit. Australia is an example, Brazil is an example, Toronto is an example. All of those are struggling. But you look anywhere else, the DAX, up, pressing for new highs. The CACs, same thing, pressing new highs. India, pressing new highs. And if you go over and start looking at China, the China shares are starting to make their run for the highs again. Hong Kong, not so much. Still got the domestic issues there. Still got the real estate issues, but Hong Kong's still holding. The Nikkei at the highs. So if we look at equities as a result of largesse in the central banks and the expectation that that's going to continue, you're seeing these markets move higher on those expectations and, of course, on what has already happened in Japan and in China. And that, of course, is putting price support under these equity markets. So, in a nutshell, if I try to wrap it all up and think about where we are and probably where we're going, I believe we still see cracks just like we've seen the last couple of weeks. But you know, it doesn't matter if it's cracked. If the glass isn't broken, if the water isn't seeping in, then it's still holding, and it's holding price. And right now, it continues to hold price. Certainly, there's some concern. And if I take you back to a monthly chart, let me pull a monthly over here, and we put, let's go back to oil. So let me go back to the OX markets and pull up the USO as a proxy and look at it on this time frame once more, and look way back here. Actually, we're not going to be able to see it on this chart. Put it on a monthly. Yeah, you can kind of see it. No, not really. You got to go back even farther, and I don't have the other charts up, but I can tell you, and maybe I'll show that on the next show. In 2008, August, gold, commodities in general, including oil, you know, if you remember, oil went up and was pressing 130, if I remember right. And then they started to sell off, and then we started to get a collapse in August. And the collapse in equities began middle of September. Now, I'm not forecasting because the circumstances, of course, are different. But it was those two sectors leading this market lower. And as you know, you see it here with the USO. It's certainly collapsing now. You've had pretty much a collapse already start in the gold market, and that's continuing as well. Is this a precursor to something larger that's going to happen to the equities? That I can't answer. All I can say is I've seen it happen before in that manner, and I'm seeing it to some extent starting to take place again, although, as I say again, circumstances are different. I don't believe that's the case. I suspect that a first pullback / retrace that does take place is probably going to get bought in equities, not sold. So I think it's a little early to worry about this, but it is one of those rhymes, so to speak, in the markets, and something to keep your eye on. Folks, I appreciate you joining me. I hope you had a nice Thanksgiving if you're domestic here. We've got the beginning of the season in terms of the holidays here and around the world. Most places, not most places, but there's usually some sort of a celebration in the majority of the world anywhere from now until the end of January, early February. So I would wish you best wishes with respect to whatever you celebrate, and ask you to help me help you. You tell a friend, spread the news, let folks know what I do, see if I can help others as well as you. Thanks, have a great night, and I'll see you again tomorrow. Take care.